Reconciliation in accounting is like that moment when you're piecing together a jigsaw puzzle and you realize a few pieces just don't fit. You've got your bank statements, your invoices, your cash books, and they're all supposed to tell the same story. But sometimes they don't. That's where reconciliation comes in. It's the process of comparing two sets of records to ensure they align. Think of it as giving your financial health a thorough checkup. Imagine you're a small business owner. You've been working hard, pouring your heart and soul into your venture. You've got sales coming in, expenses going out, and everything seems to be flowing smoothly. But then, at the end of the month, you sit down with your bank statement and your cash book, and it's like a plot twist in a thriller novel. The numbers don't match. Your heart sinks as you realize that somewhere along the line, something went awry. Maybe it's a missed transaction, a bank fee you forgot about, or even worse, a sign of fraud. Now, why is reconciliation so crucial? Well, for starters, it helps ensure that your financial records are accurate and current. It's not just about keeping the numbers neat, it's about maintaining the integrity of your business. When you reconcile your accounts, you're essentially validating that every dollar recorded leaving your account matches the amount spent. This is vital for maintaining trust with stakeholders, whether they're investors, employees, or even yourself. Let's break it down a bit. The reconciliation process typically involves gathering data from various sources: bank accounts, credit card statements, invoices, and other financial documents. You compare these records to see if they align. If they do, great, you're in the clear. But if they don't, that's when the detective work begins. You dive into your records, looking for discrepancies, trying to figure out where the numbers diverge. You might think, okay, this sounds simple enough, but it can get pretty complex, especially for businesses with a high volume of transactions. Some accountants might do this manually, while others use accounting software. The latter can make things a lot easier, but even software can't catch everything. It's still up to you to ensure that the data inputted is correct and that the reconciliation process is followed diligently. Now, let's talk about the benefits of reconciliation. First off, it helps in correcting errors and discrepancies. Whether they're intentional or accidental, errors can lead to significant issues down the line, like overstatements or understatements of income. This can affect everything from your tax liabilities to your financial planning. By reconciling regularly, you catch these mistakes early, making adjustments before they snowball into bigger problems. Another advantage: it's a fantastic way to detect fraud. Regular reconciliations act as a safety net, helping you spot suspicious transactions before they become a major issue. If you're reconciling your accounts and suddenly see a charge that doesn't make sense, it raises a red flag. You can investigate further, potentially saving yourself from significant losses. But let's not ignore the flip side. Reconciliation can be time-consuming. For small business owners, especially those without access to professional accounting systems, it can feel overwhelming. You might find yourself buried under a mountain of paperwork, trying to make sense of it all. And if your records aren't accurate or up to date, the task becomes even more daunting. It's like trying to find your way out of a maze without a map. So, what types of reconciliation should you be aware of? There's business reconciliation, which involves checking all balance sheet accounts to ensure everything has been recorded accurately. Then there's personal reconciliation, where individuals compare their credit card and bank statements to ensure their spending aligns with their records. And let's not forget account reconciliation, which ensures all accounts are balanced correctly, especially when multiple sources of records exist. This is crucial for businesses that use different systems for sales and inventory, as discrepancies can easily arise. Now, how do you actually reconcile your accounts? It starts with examining your cash book statement against your bank statement. Mark off any transactions that match. Then, note any payments in your cash book that don't appear on your bank statement. Next, look for transactions that appear in both records and check for any errors in the bank statement. Finally, ensure that your ending balances match. If they don't, it's back to the drawing board to figure out where the discrepancies lie. Timing differences often play a significant role in reconciliation issues. Sometimes, a deposit or payment in your accounting system may not yet appear on your bank statement due to processing delays. Missing transactions can also be a headache, especially in larger organizations with multiple employees and divisions. And let's not forget about mistakes. Everyone makes them, it's part of being human. Maybe a number was misread, or a calculation went awry. That's why regular reconciliation is essential. It helps you catch these errors before they spiral out of control. But perhaps the most concerning aspect of reconciliation is the potential for fraudulent activity. This is where things can get really tricky. If your reconciliation processes aren't monitored effectively, dishonest employees might take advantage of the system. They could delete records or manipulate data to cover their tracks. This is why thorough documentation and consistent processes are vital. In conclusion, reconciliation in accounting is not just a mundane task. It's a critical practice that can make or break your business's financial health. It prevents overdrafts, uncovers fraud, and ensures your financial statements are accurate and reliable. By regularly reconciling your accounts, you're not just keeping your numbers in check, you're safeguarding your business's future. So, whether you're a seasoned accountant or a small business owner just starting, remember, reconciliation is your best friend in the world of finance. Embrace it and let it guide you to financial clarity.